Hey, this is Kyle Kunkel. Welcome to the Luxury Trends Market Report. I'm going to give you the luxury trends in the real estate market globally and locally. All right. And I'm also going to talk about the banks and what's going on with the banks and why they're failing and what moves you should take to protect your money. So let's go ahead and dive in. Make sure you give us a like and a follow, and let's jump right into it. So I'm going to share with you guys my screen, and I'm going to go ahead and bring up the luxury trends that are going on right now. And so if you look at the second page right here on the Mansion Global, and I'll try to zoom in for you guys so you guys can see it, but it says Mansion Global just announced that both New York and San Francisco prices were in a decrease, were increased since February, but however, they were decreased overall. And let's see how much percentage they lost. So San Francisco lost 17%, went down 17%, and I believe so San Francisco went down 17% and New York was down 12%. So, what does that mean? You also look at what across the market, since January this year. In February, it's been a better year. March, we don't have those numbers fully yet. So February was a better month than it was in January. But overall, the prices were very puffed up since COVID. And so we were expecting some type of decrease, some type of decline, depending on where you're at. But globally, you're seeing places like New York, San Francisco, the market's dropping significantly. But on the other hand, so if you look right here, on the other hand, we reported last month markets that still offer more affordable or potential price growth are expected to have an uptick in demand. So places like where we're at locally in Durango, Colorado, small mountain towns, you look at Telluride, you look at Aspen, there are some of the higher prices being sold right now across the country. So it's desirable places that are maybe a little harder to get to, but they feel like there's going to be an uptick in these places in a lot of mountain towns. So according to Bloomberg, this generation is not living in their parents' basement anymore, and they're buying multi-million-dollar homes. So equally, Bloomberg expects that the generation to change the high-end housing market and preferences driven by technology and environmental requirements. So saying that this generation, for the resale value of your house, people are going to want smart homes. People are going to want an experience when they come into the home. People are going to want homes that are eco-friendly. So as you're looking to resell your house, especially with the newer generation come up, this is what they're looking for. So let's go to this page right here. Take a look at my notes. But yeah, just another trend that's happening globally is that people are wanting a smaller footprint. So they're not wanting the 10,000 square foot houses anymore, 5,000 square foot house. They want a 3,500 or even 2,800 square foot house that functions like a 5,000 square foot house. But they're also wanting multiple suites on each side, whether that's for parents to move into one day or for guests. That's definitely something. And you're seeing people wanting more homes on a single lot. So I think, younger people are thinking about baby boomers and their parents and getting them into the same, into the same place. So you're seeing that happening as well. But privacy in smart homes is a huge thing, and having those experiences like we talk about. So I'm going to go ahead and go to our local prices. And here, let me go back to this note right here. I'm going to zoom in. Markets with higher median sale prices: Aspen 21 million, Telluride 5.9 million, Los Angeles Beach 5.9, Naples 4.5. So you're seeing places in Colorado that are having a higher price point, median price point, and you're seeing that mainly because of demand, right? Not as much, and it's harder to get to, all those types of things. So if we look at the Durango inventory, right? So we have 53 homes available, a total sold of 8, giving us a sales ratio of 15%. In the luxury market, in our market, 845,000 and up, there's a lot of inventory. People are saying there's not a lot, but there is in the certain price points. So as soon as you get above 3.8, we got 13 homes for sale at 3.8, and none of them have sold. So let's go ahead and zoom in here. So homes sold for a median of 97.43 of list price. The most active price bandwidth right now is 845,000 and the 1.4 million. So anything, it's kind of funny, you get where the sales ratio is 50%, right? So and a lot of times that depends on a couple things, right? But right now for this last month in February, we see that the 845,000 to 900,000 basically is a very active price bandwidth, along with the 1.4 to 1.6 is a very active price bandwidth. So you're seeing that right around $1 million. Nothing's really moving as much, right? Not as quickly. So, and then the median sales price for single family is 1.7 from this last month, and the median days on market is 59 days compared to 48 days last year. So not a crazy difference, but as we always see in this time of year, we always see more homes coming to the market, more buyers wanting to buy because it's springtime, summertime. People don't want to move in the winter, right? It's spring right now, and on the day is March 20th, and we're actually getting snow over spring break. So definitely something to think about as you look to put your home on the market is, hey, when do I time it right where all the flowers are popping out, all this grass is green, and what is my home actually going to sell for? How many buyers are actually looking at my price bandwidth? So you want to make sure you do absorption rate, not just the CMA. A CMA is kind of, in my opinion, something that's kind of dead. You need to make sure you have an absorption rate looking at how many homes are actually currently on the market, and how many homes sold in that price bandwidth over the last month or two. And then that will give you an absorption rate of when the market will absorb your house, right? That way you know where to price it, how to price it. Because if you're telling me like, hey, let's list the house at 1.3, but hey, the absorption rate of 1.4 and 1.5, 1.6, there's more buyers in that price bracket from this last month, then hey, we need to look at figuring out how we're going to get your home to that price. So it's a matter of figuring, not always saying like, oh, we just dropped the price 100,000 and we'll sell it. How about we raise the price 100,000 and sell it based on the numbers? So you always got to look at the numbers. You can't just expect, you can't just look at what's been done in the past, because when you look at what's done in the past only, right, it's like trying to drive forward and you're just looking in the review mirror. You need to look through the windshield, right? So that's why it would give you an absorption rate. If you want a free absorption rate on your home, just go ahead and just direct message me. You can hit me on my email at kyle@kylekunkel.com and just say, hey, here's my address. I'd love to get an absorption rate of when my house would actually sell. And then where do you think my price, like what's the right price for my house? And we'll go ahead and do that for you for free. Now I want to switch over to talking about the banks, right? So as many of you guys know, SVB, Bank of Silicon Valley, closed, right? And it's the second biggest bank failure in our history, right? And the third biggest bank failure just happened as well. There's over 200 banks at risk. And from what I'm reading and what I'm gathering is the bigs are just becoming bigger. If you're, the small banks are going to get bought out. They're going to fail, and they're not even going to get bought out. Actually, they're just going to get the bigs are going to let them fail. That's why you didn't see anybody rescue SVB, because they're going to be able to get things on the pennies. These big banks are going to come in and gobble up all their assets for pennies compared to what they could get them if they just sold the bank, right? So you're going to see a lot of small bank failures, in my opinion. And so let's break it down though. So I'm using an article from the Trends Journal. So it says trends again, the nation is not near a 2% inflation rate, and rather than blame themselves and Washington for artificially inflating the economy with a 0% interest rate policy and several $1 trillion of made up money backed by nothing to fight the COVID war. The feds and the street blame the rising wages, which have in fact not kept up with inflation. So you see, the prices of oil and what their thoughts are there. So it says the sharp decline represented a 9-week low based on fears of financial crisis and recessions after Silicon Valley and other banks went bust. Gerald Celente, who accurately forecasted the 1987 stock market crash, dot-com bust, bubble bust, and the panic of 2008, he said that conditions around the world had never been so chaotic in the 43 years of trending. And and what are the moves? What should you do? A lot of people are going into different places. So here's one thing I know, that if you have over $250,000 in the bank, after that number is not getting insured. So you need to be diverse just in your banks. You need to probably have money split up into all these banks. And you can't have it in bonds, and you can't have it in stocks, because those things are plummeting, right? So we're going to see a big uptick, in my opinion, according to the forecast in gold, right? So the forecast for gold prices sank into the high of 1,600 per ounce. Last year, we have forecasted the prices had bottomed and the gold prices would be rising. With no sign of the Ukraine war ending and financial economic crisis escalating, we're forecasting that gold prices will keep rising. And so I believe that gold prices, gold and silver, will continue to rise, because what they call that is God's money, right? It's been around since the very beginning of time. In the Inca, Mayan ages, that's what they're going for. They wanted gold, right? And so gold as a precious metal is going to be an asset that's around for a long time, and the dollar's not, because in my opinion, as soon as they start, so the only reason why the dollar is strong right now is because they're raising rates, and as soon as they start lowering rates as we come into this election year of 2024, you're going to see the dollar decline, and you can see the dollar crash, and they're going to enter in what they've been testing right now is the digital dollar. And how they introduce that, nobody knows. But how do you know that they're not going to say, hey, your $1 is now worth, that $1 value is now worth 50 cents of a digital dollar, right? So I believe there's going to be a great reset. So how do you hold on to your value, right? You got to put it in real assets, oil and gas, putting in real assets of gold and silver, putting in real assets of real estate, right? And so these, people are like, oh, you got to have it in the marketplace, but the tech is dropping 50%, right? Stocks have dropped 50%. Amazon, Apple, all these places are just laying off people because they can't afford to pay them. So then what, right? And so, hey, your real estate goes down 10%. That's all right. At least I didn't lose 50%. So, and then Bitcoin, right? High risk, but what they're saying is Bitcoin weathered the economic bank calamity storm that hit last week. We maintain our forecast that Bitcoin prices will stabilize in its current place at 25,000 plus range in several weeks, and it will have a strong potential to keep moving higher and higher, right? It's the digital asset, the digital gold. It's what people are moving to, because it's hard sometimes to move. Like if you got millions of dollars in gold, you can't just pick it up, move it. But if you have millions of dollars in Bitcoin, you can just press a button and you can send it here, send it there. So it's transferable, which is great, and mobile, which is great, and it's scarce, which is also great. So, all right, let's take a look at this article, also talking about the banks. And so this is going to go into the detail of why Silicon Bank failed. And it says U.S. banks hold up to $620 billion in unrealized losses. And this is going to tell us why. So the Silicon Valley Bank collapsed in significant measure because it held a portfolio of government bonds it bought when the interest rates were at a rock bottom. Banks were awash in cash as households had few places to spend money during the COVID war. Banks needed to put their cash to work, and what could be a safer during times of economic uncertainty than the government security. So they're buying up bonds, right? So they're buying up all these bonds, and what they didn't realize. So as soon as the interest rates went up, these bonds lost value, and so they're having to sell them at a loss. So banks are at a 620 billion with a B in unrealized losses, right? And because people are demanding their money, and they got to be able to pay their clients or customers, and so when they go pay them, they got to sell these bonds at a losses. Now there's a program right now that the government's saying, hey, you can borrow money again from us, right? We're going to print more money so that you can pay your people without having to sell these bonds at a loss. But that's just artificially fixing the problem. It's not really fixing the problem. All right. So let's go down to the very bottom. And I think this gives you what to do, what to think about, where you should be putting your money. It says, if you want to know what banks are going to go belly up next, simply look at which ones took the largest loan advantages from Federal Home Loans Bank last year. WSOP noted that appears to mean that they were seeing an exodus in depositors' money and needed to plug their liquidity holes. And so it's just saying the same thing, right? People were buying up these bonds, people were buying up these things, bonds basically, and they're having to sell them at a loss to pay off for people. So it's saying also, you got to look at the Federal Home Loan Bank last year. That's who was giving out these bonds for homes. So anyways, long story short, what should you do? What does this mean for you? Like I said, I think the dollar's puffed up. I think that in 2024, as we come to elections, interest rates are going to drop. And as they drop, the dollar is going to fail, and they're going to let it fail. And you're seeing, they're saying, hey, yeah, we're not going to bail out these banks, because all the small banks are going to fail, and there's just going to be 3 or 4 big banks, and the banksters are going to, the rich get richer, and that's kind of how it works. And it's easy to get mad and frustrated, but it's like, hey, I'm this little guy. How do I make the moves, right? It's a game of chess, right? And you got to figure out how to play the game. And so, in my opinion, I think I think trends in, I'm not telling you where to put your money. I'm just saying the trends that I think are safer where places, the trends that show where your money is going to be protected most is gold, silver, Bitcoin, oil and gas, real estate, hard assets, in my opinion. Also, something to consider, commercial. I think there's going to be this is just a side note, but I think there's going to be a lot of commercial space available, minus the multifamily space. But commercial spaces, because what's happening is these people got into a variable rate. That's what happens in these commercial banks, or in these commercial buildings. They got into variable rate. Rates shot up. Now their clients or their tenants are in at a lower rate, and they can't pay, right? So now they have to give this loss back to these losing banks, right? And they're going to end up selling them at a very, very, very cheap. Eventually, I think it'll be very cheap. You can pick up commercial space very cheap. So that is my thoughts on that. And let me know what you think. Do you agree? Do you disagree? Do you like what I'm giving you from the Trends Journal? Do you like what I'm giving you from our luxury market report? These are just the facts. These are just the numbers, and I want to know what you think. Do you agree? What would you do? What are you doing with your money? I want to know, because I'm always looking to learn. I want to be the best student in the world. So tell me what you're doing, and give me a like, give me a comment, and share our video with your friends. And like I said, if you're in a local market and you're looking to list your house or figure out what your house is worth in this economic times, and you want to figure out when to sell it, how to sell it, and for how much, go ahead and reach out to us, and we'll give you a free analysis, free market report, but more importantly, it's a free CMA and a free absorption rate, because the absorption rate is what's key to help you sell your house. So all right, there it is. There's the numbers. Have a blessed day, and we'll see you next time. All right, bye.